Hello, everyone. It's that time of the week. Happy Friday. It's time for the Security Token Show. We've got a heck of a roundup of all the latest tokenization RWA news. We're your hosts. You can call me Happy. I'm joined by Kyle. What a week, Kyle. How are you today?
I am great. We've got our fresh little backgrounds here. I see the workshop.stm.co in your background, Herwig. It sounds like there's a lot of great things planned for STM on top of another amazing week here on the Security Token Show.
Yeah, we've always got great updates. We are indeed in the office here. We figured, you know what, time to show people, where we work a little bit here. We like to show off. We're a cool, proud company here in Miami. For those of you who are in the area, please come visit us. Come check it out. But in the meantime, Kyle, we've got a heck of a lot of news to get into. Once again, the summer is not slowing down one bit. So we don't have any guests this week. So we got a nice little show between us. Shall we get into it?
Let's do it.
Kyle, it's time for the market movements, which means we're going to cover the biggest headlines in the space this week. And we're kicking it off with a big one. Coinbase Asset Management is officially in the game, the money market fund race, if you will, where we're talking about tokenized liquidity products, right? U.S. Treasury funds, money market funds. We've seen BUIDL. We've seen Franklin Templeton's Benji. We've, of course, seen Ondo's great success, as well as a litany of many other great products out there. So this is definitely one of the hottest use cases. And now Coinbase Asset Management is getting into it. I want to give a quick highlight for those who are not too familiar. We see Coinbase, the parent, they obviously don't list any tokenized asset securities on their crypto exchange, but their custody solution is very popular for tokenized assets. Base, their blockchain is a very popular selection by issuers to tokenize on. And now Coinbase Asset Management is seeing the value of having on-chain money market funds, on-chain liquidity products. And the rumor, at least according to CoinDesk here, is that they are fully building this out with Apex Group, which is a 13,000 employees, massive fund services company. Kyle, what do you make of this? This is extremely exciting.
Well, look, I think that the biggest thing here is if they can, I'm not exactly sure what the process looks like for this, but I believe that it's relatively straightforward because no one made a huge deal out of it and it didn't seem like it took very long. It's to get a product like this considered a cash equivalent. And if you can do that, then that almost means that it's just an interest-bearing stablecoin that is a compliant asset. And so if you can have a dollar that's generating you cash flow, but you can still move like a dollar would, and settle assets with it and use these types of things, it's a really, really valuable functional tool within the exchange's business model or within the investors and the users on the platform just in generally holding. There's almost no reason why you would hold stablecoin over an interest-bearing one, right? If you're going to get 5%, why would you just leave that on the table? So it's interesting. It makes a lot of sense that they're doing this. I know that BlackRock custodies all their Bitcoin through Coinbase. And I know that like Fidelity, for example, that also has a Bitcoin ETF and an ETH ETF custodies those assets themselves. So it will be interesting to see if this becomes a competitive product. Will BlackRock in the future explore how to self-custody these things or potentially work with another partner? And the other piece here that I think is interesting that's like a sneaky change is what happens to the stablecoin issuers. How does Circle feel about this type of thing? How does some of the other large stablecoin issuers, how do they compete with a product like this? And does it either help solidify the value of traditional stablecoins, or does it potentially undermine the value prospect for stablecoin issuers? A lot of that is still yet to be seen.
Lot to unpack there, Kyle. I think it's a great point at the end there about Circle. We did see, with BlackRock's BUIDL, as well as I believe with Franklin Templeton, that Circle basically offers support to allow you to immediately convert from your product into USDC. I call it 100% liquidity because the idea is now I don't need a counterparty. Circle is essentially allowing me to completely liquidate into USDC instantly. So they invested in Securitize as well, I believe. So they are definitely trying to make sure that their product is either backing these infrastructure tools or at least complementary and useful, because I think you bring up a great point. But also, you're right. There are so many different applications for tokenized liquidity products and money market funds. There's so many different use cases. There's so many different audiences, institutional versus retail. BlackRock, very institutional. Franklin Templeton, very retail. Geography, right? Where is it located? Potential tax advantages and other things. All of these things go into play. So we'll be curious to see who exactly, presumably more institutionally focused, where Coinbase Asset Management will be positioning this thing, but also the different features, right? I'm very curious to see. One, will obviously expect it will be using the base blockchain instead of Ethereum, like with BlackRock and their BUIDL product. One might see potential, what I'd like to see, I should say, is potentially proof of reserves, right? I think there's a great opportunity for these yield-bearing stable coins, as you describe them, Kyle, to do a better job of showing proof of reserves with on-chain products underneath, right? So it shouldn't be that hard to show that transparency. I would love to see that, right? Coinbase, being a crypto native company, hopefully is exploring something like that. But you're spot on. It'll be interesting to see exactly, who this is aimed at. And also, BlackRock being the biggest asset manager, they were able to grow it, BUIDL, into the largest tokenized fund very quickly. But Coinbase has been in the front lines for quite a while now, has a huge network as well. It'll be interesting to see what kind of traction they also explode with once they launch.
Yeah. I think that the final point here is that for anyone that's watching that is an issuer or is a financial service provider, or if you're looking to get into the space, it's another good, interesting perspective on sometimes being the first mover isn't always the best thing, right? Coinbase is able to kind of watch and see how some of these products come to market, watch a lot of the trials and tribulations, and then bring a structured product following the clear path. It's going to save you on legal, it's going to save you on compliance, and probably a lot of headaches by trying to just not need to reinvent the wheel and instead focusing on distribution and getting people to actually invest in your product, which does tend to be the hardest part.
It definitely is, as we well know. And speaking of that challenge, many others are going to face the same thing. We got a couple more cool products we're going to talk about this segment here, Kyle. I want to start off with Superstate's crypto carry fund, the USCC. So Superstate, they've been focused on institutional investors as a tokenized asset manager, if you will. Although in this case, they note that ownership in the USCC can be represented in both tokenized and non-tokenized format, Kyle. But they are essentially creating a cash and carry trade strategy optimized for yield and risk around Bitcoin and Ethereum spot and futures markets. So a very interesting strategy behind the fund here. But of course, it's tokenized, and you'll be able to access it via all of the great, class services that the Superstate offers within their funds. So I think it's very cool to see Superstate launch more products, and specifically more tokenization products that are focused on the crypto asset class, because I do believe it's sort of a two birds, one stone, where you are bringing crypto into RWAs, into tokenization, as well as institutions into crypto, into tokenization through this model. So good on you, Superstate. We'll see how also we'll want to track the success, of course, of the USCC.
Yeah, it'll be interesting to see what documents that you need to sign as an investor to participate in this, or how active retail is going to be able to be involved here. My gut says that retail, or just your general investor, is not going to be able to get access to this product. But who knows? There certainly is innovation going on in this space, and maybe international investors, there's other opportunities. But Superstate getting very, very active. Robert Leshner doing a good job. He's certainly been in this industry for quite a long time, and they see the opportunity of bringing yield-bearing assets on-chain. This is a good example of a real-world asset that is coming into the market. I think people are just tired of getting yield from lending to speculators, and they're trying to find more stable sources of income to be generated on their passive assets, and Superstate, another product coming to market.
And we got a couple more to talk about here. This one's pretty cool, Kyle. We're going to stay on course back here with our news about Coinbase Asset Management and their tokenized money market fund. Well, we are now seeing a couple more products similar come to market, this time as a first on Solana, Kyle. So Libre is powering these products. Libre is backed by Brevin Howard, but they also attracted Hamilton Lane to be the first asset manager there to sort of claim that Solana launch for, again, a similar liquidity product, which is the same deal They offer actually two more funds, one that's associated with Brevin Howard's master fund and another one with a BlackRock fund. So again, all targeting around sort of this liquidity solution. That's great news, I think, for Solana, for one, as they also start to go more institutional and start to sort of add continuous use cases in the RWA space, but also Libre attracting 20 million in capital as part of all of this, I think is a very strong sign. And I'm very excited to see Libre come on the market with these products. Kyle, what are your takes?
Yeah, I would imagine Libre is kind of like a feeder style of distribution agent or a co-syndication platform that's bringing capital into these types of products that traditionally had super high minimums, traditionally weren't able to be accessed by an accredited investor or somebody that's trying to deploy with 5 figures as opposed to 6 or 7 figures that are being deployed into these things. We've seen how companies like KKR have taken advantage of this type of solution with Securitize, and we've seen this across the board. Hamilton Lane crushing it. They've been super active in this industry. They get it, and I think it makes sense. And it further proves the point that it does seem like the tokenization component, like making the token itself onto the blockchain, does seem to be commoditized. That's almost kind of a value add or a loss leader for these platforms. Sure, you can do that, but what else are you bringing to me? And Libre here, with the help of Brevin Howard and Nomura, is being able to say, we're going to bring in capital and investors and LPs into your fund products. That's why you should tokenize with us over working with somebody else.
Summarize it well, Kyle. I think purely offering the technology is going to have to be sort of a loss leader, as you mentioned, kind of commodity play, because I think at the end of the day, as useful as it is to go from a spreadsheet to tokenization, the more powerful angle is, of course, being able to help with the distribution or financial services, as I like to call it, around your ecosystem where you can add more value to your raise or to your product, et cetera. So I think as we've been acknowledging already this episode, this won't stop. We're going to continue to see more and more products go to different chains, as well as continue to fill this immense gap to where you mentioned it earlier, Kyle, an on-chain economy where we can have now instant transfers. There's no reason to be holding a stable coin that isn't providing you yield when you're going to have a litany of different options by different providers and different ecosystems and chains, et cetera. So
that's right.
It's all the building bricks or building blocks are being built. And speaking of institutional, we're seeing that trend this week. What I also didn't get a chance to cover last week, Kyle, was Italy's top banks put together here, working with the European Central Bank, a 25 million euro bond on Polygon. So this is, of course, one of these typical kind of trials and proof of concepts where they're bringing more and more activity in. I'm loving the participants here: Cassa Depositi e Prestiti and Intensa San Paola. Hopefully I said that right. They participated in this 25 million euro bond, marking Italy's first digital bond issuance, they say, under the new digital asset regulations. And the issuance is, of course, of being part of the European Central Bank trial, leveraging a lot of the technology that they've brought to the table too. But on Polygon, it's been rated by S&P, by Fitch, by Scope. This is, as a classic bond sort of issuance as it gets, but of course with a twist. It's in Italy and it's on chain.
Yeah, more different blockchain tokenizations, right? Like this is Polygon. We had Solana. We've certainly seen ETH and other solutions like from BlackRock's BUIDL. So this is a fascinating continued development that we've seen coming now for years. It does seem like retrofitting blockchains for your solution is what a lot of these companies are trying to do. There doesn't seem to be a consensus for which one everyone's using. Right now, they're just trying a bunch of different options, which, depending on how you look at it, either means that any of them can work, or it means that none of them are the proper solution and that there isn't a consensus number one. Interesting to see how that shakes out over time. The other thing I wanted to add is that this bond was actually rated pretty strongly by all three of the Standard & Poor's, Fitch, as well as Scope. So they were rated, it was rated A2, F2, or S2, depending on which of those companies. And so A1, F1, and S1 would be the best, and then 3, and I guess later in the line would be the poor. So it was rated kind of right in the middle, pretty good, based off of what I was able to read. It's a 3.6% coupon paid out annually. And so, so it's pretty interesting to see. Great to see that there's precedent now for more and more of these things being rated. I think that that's really the biggest thing here is that, the beachhead has been breached with respect to bringing tokenized products into these rating agencies and having them understand it and not necessarily penalize you for doing that. And that only leaves us with the upside of, as this integration becomes more seamless, as you can pay these things out quicker and more transparently, it's going to become a premium from my prediction on how these ratings are going to be viewed in the future.
Completely agree. And it's great to see just more and more products and ratings infrastructure coming to the tokenization market. This is what gives investors confidence. This is what I think was lacking with a lot of the products that have been in the market to date. So the fact that now the new ones come in the market are saying, hey, we're going to do this the traditional way, I think is awesome to see. And Kyle, I have one more cool topic for us to talk about.
Tell me.
I want to give a shout out here to Etherfuse for raising $3 million to tokenize bonds in Mexico. So that actually put their company at a $12.5 million valuation, they proudly say. It was actually led by White Star Capital and North Island Ventures. And of course, they're focused on this emerging market asset class. They have debt products already providing around high real and safe yields, they say. But also, they expect to expand to over 3,500 real world assets. It's immense growth. Can't wait to see them put that money to work and make that happen. So good for them. Kyle, any thoughts to see that the market is now starting to once again invest in other products or infrastructure, I should say?
Hey, high, real, and safe yields. That's what we've been talking about with tokenized real world assets, right? You're bringing actual value creation into these tokenized assets, which is just, I think, going to build a more sustainable system than lending it out to other speculators. It's just like, it seems so clear to me. I think hopefully a lot of these companies have learned their lesson, not only by the fact that they blew up and lost a lot of money, but also it's a good example of some of the regulatory, right? I mean, like having the SEC cracking down on a Genesis or forcing the DCG's hand with respect to having to settle a lot of these debts with Gemini and some of the other parties involved. You just can't do some of the things that they did. And so hopefully we're going to be able to learn our lesson and figure out how can we bring yield that's actually legitimate and not just inflated by, low float assets that are being manipulated left and right, to build a more sustainable financial economy. Shout out to Etherfuse. Mexico is an interesting market, and it's we've seen some activity in Central America, and the more the merrier, I think, as far as I'm concerned.
Yeah, Mexico is definitely heating up, if you will, in terms of tokenization activity. And I'm sure a lot of the issuers looking to leverage this platform by Etherfuse is, going to be very needed. I assume it's mostly targeted to small to medium enterprises. And, Mexico, I think, is a great example of an untapped market where everybody may be focused on the big capital markets around the world. Tokenization is going to be global. It's going to be everywhere. Every market, every country can take advantage of this to benefit their economy and financial infrastructure. So I think it's great to see, and I hope to see more and more of this trend where people are going to be investing in infrastructure focused on specific asset classes, specific geographies, specific investor types and use cases, because that's where it's going to start. It's not going to be all done by one company, as we're clearly seeing. So let the unraveling begin. And I'm excited to see where the industry heads, because we've got a heck of a lot more news to cover right now in the Token Debrief. So let's just get right to it. Some amazing news from Coinbase Asset Management, Libre, Superstate, ECB, and Etherfuse. But don't go anywhere. I've got another helping of RWA updates for you right now. So starting off with more new tokens, including a digital bond from the Republic of Slovenia, which is being issued and placed by BNP Paribas Bank. And they claim to be the first Eurozone sovereign digital bond and are using the ECB's settlement technology. Next, we saw Black Manta Capital Partners announce the sale of BlocHome tokens. So for about €1,000 in Europe, can get you exposure to real estate in Luxembourg through this new offering. And they already filled 75% of the €4 million they're seeking from 350 investors. Pretty incredible. IXSwap in Singapore also made a record first for its OTP portfolio influencer tokenization model, or their on-chain tokenized portfolios. Now, the influencer in question is esports gamer Coach K, who curated a GameFi portfolio that over $500K was raised for. So congratulations on this milestone, IXSwap. I bet we can expect more OTPs and from more thought leaders soon, I bet. And Schroders Capital in Hannover also announced a team up to tokenize reinsurance markets. These multi-billion-dollar firms are testing the capabilities of blockchain for ILSs, or insurance-linked securities, and I can't wait for them to move from pilot to commercial offerings. And over the last month, we've seen both Arbitrum and MakerDAO show plans to diversify their treasuries with RWA allocations. And now Ethena is following in their footsteps with BlackRock's BUIDL product already calling to take a majority of the allocation. And this trend will not stop, folks, where protocols and DAOs will continue to expand into RWAs, first by buying them up for their real-world yield. And Centrifuge also announced that their RWA lending pools are on Base are coming to Polytrade now, and further expanding the number of RWA partnerships for Polytrade specifically. No doubt this will be another great distribution channel for Centrifuge here. Mountain Protocol also announced that they have the highest level financial services license from Bermuda, called the Class F license. This is, of course, important for their stablecoin operations, which now sees a total size of well over 150 million. Wow. And the news doesn't stop there. We've got more infrastructure updates. There's a new blockchain layer 2 on Optimism called Race, designed for tokenization of RWAs. The mainnet is now live following a $5 million raise they did earlier this year. Ownera also announced support for the Canton network, bringing assets on this platform to the different integrated tokenization partners for interoperability amongst their members. Another partnership highlights Shintai, leveraging the Allo blockchain and platform. Allo already services $2.2 billion across over 1,500 assets on their chain and provides the tech to allow Shintai to support the U.S. market. And finally, we saw a reaffirmation between INX and Republic, which we've long been reporting a proposed acquisition by Republic of INX for a while. Nothing new from this announcement there, other than it confirms a relationship between the two, who will continue to refer issuers and share commissions to each other, pointing to the English football club Watford FC as an example. Wow, what another week for this industry. Let's see if any of those new products, entrants, or partnerships made the cut for Company of the Week.
Oh, Herwig, it is that time of the week after a filled show. I thought we had an A+ starting segment. I thought you crushed it later in the show, talking about all the great headlines in the Token Debrief. A+ job there as well. But as you know, the A++ segment of the show, my favorite segment of the show, popularly voted the most important award in the tokenization space, perhaps the most illustrious award in financial technology. It is, of course, the Company of the Year award, which we're not giving out today, but we are giving out 2 potential winners who are nominated in the running for that illustrious award through our Companies of the Week. This is episode 245, where Herwig and I take 2 companies that we wanted to shout out for making an impactful move in the industry that's going to drive things forward with innovation. Sometimes that's small companies, sometimes that's big companies, and even sometimes it can be regulators, depending on how impactful they've been. So without further ado, Herwig, please, how about you share with us your choice for this week's episode?
Kyle, I believe, obviously it's not exactly the right timing, I believe, but right around our 5th year anniversary in the show, 245 episodes. So it's a great honor to award the company this week with that sort of special annotation. So I'm going to give it out to somebody that I thought, I believe in very bright future. I think they're doing everything the right way. They've got a lot of incredible big partners behind them. I'm going to give my company of the week to Libre. They helped bring the first, product to the Solana blockchain now in tandem with Hamilton Lane. Of course, working with Brevin Howard, which is another massive, massive asset manager behind them. So that's why this tells me that they are, to your point earlier on the show, Kyle, they're going to not just offer some great tokenization technology, which they no doubt have, but they are also bringing in institutional networks. They are going to grow that side of things. I think you're going to see who takes advantage of this platform is going to be extremely high quality. So it's just nice to see more and more platforms in the space that are helping bridge this gap of onboarding high quality products into the industry. I'm sure we're going to see many more announcements for many more products coming soon. But it'll also be very interesting to see an eye on Solana. To see if they continue to support that ecosystem, to see what kind of reaction the actual community sort of starts to give Libre, what kind of support and potential, what kind of capital comes into their products will be very, very interesting to see because, of course, a lot of eyes are on Solana with all of their traction and growth. So now that RWAs in this format through Libre are officially on Solana, I'm excited to see, exactly how institutions react and the Solana ecosystem, Kyle.
Yeah, I think this makes total sense. I mean, we need more distribution partners in this industry that are going to be connecting directly with accredited high net worth and institutional investors and helping onboard them into this ecosystem. And that's exactly what Libre is trying to do here. That's solving a real and immediate problem in the space. And it is, to your point, very interesting that they picked Solana. We haven't seen a ton of real world asset activity on Solana relative to the Ethereum virtual machine compliant platforms, whether it's Ethereum or Polygon or some of the others. So I'm interested to see how Solana acts and how the community supports that. They have a very active community, and it is a relatively liquid chain with respect to crypto. So it'll be cool to see if that has any competitive advantages for them moving forward.
Well, Kyle, that's my company of the week. I think I might be able to guess who you're going to pick, but of course, do the honors.
Look, they're big, they're institutional, and they've been dominating the industry. And now they are bringing a competitive product to BlackRock. That is Coinbase Asset Management. This is my winner this week because they are going to be launching a tokenized money market fund. Now, if you remember, they were in the news with some controversy over rehypothecation. This is something that they got hit with alongside BlockFi and Circle and some others for offering earn and lending programs against crypto because the SEC said, well, that's not a compliant issuance. And so what did Coinbase say? Fine, we'll launch a compliant asset issuance. And now they are bringing this same type of product to market. They've seen how it's worked with some of their maybe it's competitors, maybe it's partners, depending on how you look at their relationship with some of these other institutions. But they're bringing another product to market that's going to be tokenizing whatever, stable coins or a money market fund product that you're going to be able to either stake through or do these things. And they obviously have a pretty big leg up because they have so many users on their platform directly. They're going to be able to offer this kind of seamless process. Again, I will be fascinated, as I said earlier in the show about someone else, I'll be fascinated to see how the documentation goes here about who's able to participate, what you're going to have to sign or accept in order to participate. But I think this is an interesting product. It's going to help drive institutional adoption by bringing more stability in the financial ecosystem to the tokenized market. So Herwig, for that reason, Coinbase Asset Management is my winner.
That is indeed what I suspected, and for good reason, because I think all eyes are going to be on this. Not sure if this was part of their plan in terms of, getting the word out. But I think it's going to be a great way to build the hype because I think, again, they bring a great name from both the crypto perspective, but as well as they've been building a great network on the institutional side. So to see Coinbase Asset Management get active once again proves that Coinbase is going to support tokenization in the long run. They're already doing it in so many other ways. We know how complicated the U.S. issues are. So don't expect anything anytime soon, what I would say for retail. I think based on this move, we're going to start to see a whole lot more institutional activity coming from Cam here, if you will. So great choice, Kyle.
Thank you. And with that, Herwig, I think that concludes our show. What you got for the crowd to close us out?
Well, the usual, check us out at stm.co. We got a lot of great data. We're now over 40 billion in market cap, over 600 tokens. The market is getting bigger every day. And we've got it all for you at stm.co. So to go check it out. And of course, we've got more content on YouTube for you to go subscribe and like. We really appreciate all the love and support that you do give us to keep this show going. Hopefully you like the new setups. Feedback is welcome. But Kyle, I know you're going to be heading out for a couple of weeks on some pretty exciting stuff. So we are going to miss you. But we, of course, wish you safe travels.
Yeah, I'll be back in 2 weeks. So you'll miss me for 2 episodes, but then you better believe I'm back at it. And just because of that, I want to throw a little Easter egg in here for anybody that's watching to the end of the show. If you message me on Twitter or LinkedIn or Herwig or whoever you want to reach out to, the first person that sends happy tokenizing to either me or Herwig is going to get a signed copy of our book that we will mail to you. So somebody is going to win that award. Just make sure you reach out to either Herwig or myself, and the first winner is going to get a copy. So definitely make sure you do that if you've made it this far.
Let's see who's watching, Kyle. What a nice giveaway. I love it. I love it. So until next Friday, then, you know what I'm going to say. Happy tokenizing.